Walk down any high street in Britain today and you'll see the signs. Not the for sale signs, those are actually disappearing in the areas that really matter, but the signs of a quiet, systemic shift that most people are too distracted to notice. We are living through the greatest transfer of asset ownership in the history of the United Kingdom. While the headlines scream about a looming UK housing crash and your friends at the pub complain about UK mortgage rates hitting their ceiling, something else is happening in the shadows, something massive, something silent. There is a game being played with the very soil of this country. And right now, if you are reading the mainstream news looking for generic advice on UK real estate investing, you are playing with a blindfold on. Because the people really buying Britain, they aren't looking at the same data you are. They aren't worried about the price of eggs, and they certainly aren't waiting for permission. Most people think the property market is broken. I'm here to tell you it's working exactly as it was designed to, just not for you, not anymore. So is now a good time to buy property in the UK? That depends entirely on whether you understand who you're competing against. By the end of this broadcast, you won't just know who is buying Britain, you'll know why they are doing it, what they know that you don't, and exactly how you can position yourself to survive the shift. Because the data I'm about to share doesn't just change the narrative, it changes your future. Let's look at the reality. For the last 2 years, the media has been obsessed with the idea of a collapse. They've been selling fear because fear clicks. They tell you that high interest rates will force a sell-off, that prices will plummet, and that you should wait. But while the average British family sat on their hands, paralyzed by the threat of a UK housing forecast that looked bleak, billions of pounds of capital quietly crossed our borders. Here is the first uncomfortable truth. The era of the small landlord is being systematically dismantled. It's not an accident, it's a strategy. Government policies over the last decade have made it increasingly difficult for the mom-and-pop investor to turn a profit. Tax changes, regulation shifts, higher borrowing costs. The amateur is being squeezed out. But nature abhors a vacuum. When the small players exit, who takes the board? Enter the institutions. We are seeing a pivot from a homeowner nation to a subscription nation. You've seen it with your movies, your music, your food delivery. Now it's coming for your four walls. Major financial giants, pension funds, insurance companies, sovereign wealth funds are pouring capital into what we call the build-to-rent sector. We're talking about massive global asset managers and high street banks. Yes, the people who sell you sofas now want to rent you the apartment to put it in. Why? Why would smart money dump billions into the UK property market when everyone else is terrified? Because they aren't flipping houses, they are buying income streams. They know that in a world of volatile stocks and crashing crypto, a brick-and-mortar asset on an island with a growing population and a chronic supply shortage is the closest thing to a gold mine you can find. They aren't worried about house prices dipping 5% this year. They are looking at the rental yield for the next 50 years. They are betting against your ability to buy. Let that sink in. Their business model relies on a generation of people who will never own a home. But that's only half the story. The institutional money is domestic, calculated, and slow. The other buyer, they are fast, they are cash-rich, and they are buying Britain at a discount. Let's talk about the currency play. This is the hidden discount that no estate agent will mention to you. When the British pound takes a battering, UK property doesn't just become cheaper for you, it becomes a fire sale for the rest of the world. For a dollar-denominated buyer, someone from the US, or holding assets pegged to the dollar in the Middle East or Asia, London property prices, combined with the currency exchange, effectively drop by 20 to 30% in real terms compared to historic highs. While you were worrying about UK mortgage rates hitting 5 or 6%, an investor from Hong Kong or Singapore was looking at a prime asset in Manchester or Birmingham and seeing a massive clearance sale sticker. This isn't xenophobia, it's pure economics. We are seeing a massive influx of capital from Hong Kong specifically. Since the BNO visa route opened, we aren't just seeing people moving here, we are seeing wealth transfer. And unlike the institutional giants who buy entire blocks, these individual investors are buying the very stock that first-time buyers are fighting for. 2-bed flats, 3-bed semis in good school catchment areas. They are cash buyers. They don't care about mortgage rates, they don't have chains, and they can move in 2 weeks. If you are a first-time buyer trying to get a mortgage approved, waiting for a lender's valuation, and hoping the seller doesn't pull out, you are bringing a knife to a gunfight. So what does this do to the UK housing forecast? It creates a 2-tier market. The media talks about the UK property market as if it's one single thing. It's not. It's fractured. We have the mortgage belt, the suburban family homes dependent on domestic wages and domestic lending. That market is hurting. That market is where you see the price corrections. That is where the pain is real. Then you have the global asset class, prime city centers, university towns, high-yield zones. This market has decoupled from the British economy. It doesn't care if the UK enters a recession because the money supporting it isn't coming from the UK economy. This brings us to a terrifying question, but one we must answer to understand the future. Is the British dream of home ownership dying? If you look at the supply data, it's chilling. The government has consistently missed housing targets. Planning permission is a nightmare. The cost of materials has skyrocketed. Small developers are going bust. We are not building enough homes, period. When you have a rising population, net migration hitting record highs, and a complete stagnation in new supply, basic supply and demand economics take over. Prices cannot crash in the long term under these conditions. They can wobble, they can correct, but a total collapse? A 40% drop that people are praying for? That would require a massive oversupply of homes. Look out your window. Do you see millions of empty homes waiting for buyers? No. You see queues of 50 people trying to rent a single studio apartment. This supply crunch is the safety net for the investors I mentioned earlier. They know that even if house prices stagnate, rents are skyrocketing. And this is where the UK property investment strategy changes for the smart money. The amateurs are looking for capital appreciation, hoping the house goes up in value next year. The pros are looking at yield. They are looking at cash flow, because when inflation is high, cash flow is king. But here is the twist. This isn't a message to tell you to give up. This isn't a message to tell you it's too late. In fact, the chaos I've just described has created a window of opportunity that is arguably better than the boom times of 2021. When the tide goes out, you see who was swimming naked. The speculators are gone. The get-rich-quick property gurus have gone quiet. The competition from amateur landlords has vanished because they are terrified of the headlines. This leaves the field open for the strategic investor. But you cannot buy like you used to. You cannot just buy a random house and hope for the best. That strategy is dead. So, is now a good time to buy property in the UK? Yes, but only if you buy what the giants can't buy. Think about it. The giant institutional funds aren't going to buy a rundown Victorian terrace in a secondary town that needs a new roof and a damp course injection. It's too messy. It doesn't fit their spreadsheet. The overseas cash buyer often wants shiny and new. They want a glass box with a concierge. They rarely want to get their hands dirty with a refurbishment project in a working-class suburb. This is your moat. This is your advantage. Value add. The market is currently mispricing problems. A house that needs work is sitting on the market longer than ever because regular buyers can't afford the renovation costs on top of high mortgage payments. They want turnkey. If you can solve the problem, if you can take the ugly duckling, force the appreciation through renovation, and then either refinance or sell, you manufacture your own equity. You don't wait for the market to rise, you force the value up yourself. Furthermore, look at the areas the institutions are ignoring. They are obsessed with the Tier 1 cities, London, Manchester, Birmingham. But look at the ripple effect. Look at the towns 30 minutes outside these hubs. The commuter belt is redefining itself as the hybrid working belt. The data shows that yields in the northeast, the northwest, and parts of the Midlands are still offering significant returns. Returns that cover the higher UK mortgage rates and still leave profit. But you have to be forensic. You have to treat this like a business, not a hobby. Let's go deeper into the psychology of the market right now. The sentiment is currently at rock bottom. The dinner party conversation about property is negative. Warren Buffett's famous quote, "Be fearful when others are greedy, and greedy when others are fearful," is thrown around a lot, but few people actually have the stomach to do it. Right now, sellers are motivated. A year ago, a seller would laugh at an offer 10% below asking price. Today, they are listening. They are nervous. They have a mortgage chain about to collapse. They need a solution. If you are an investor, you are not just buying a house, you are solving a problem for a seller who needs to move. We are also seeing a massive shift in the UK real estate investing landscape regarding energy efficiency. The government's push for net zero is scaring a lot of old-school landlords into selling. They don't want to upgrade their EPC ratings. They are dumping stock. This is the green opportunity. Buying older stock, retrofitting it to be energy efficient, and bringing it back to the market. You get a discount on the buy, you add value, and you future-proof the asset. So let's pull this all together. Who is buying Britain? The pension funds are buying the city centres to rent them back to you forever. The dollar-rich foreign investors are buying the luxury stock and the new builds as a safe haven for their wealth. The cash-rich downsizers are buying the premium bungalows and cottages. Where does that leave you? It leaves you in the gaps. It leaves you in the messy, difficult, unglamorous, high-potential trenches of the market. If you sit on the sidelines waiting for a UK housing crash that wipes 40% off the value, you might be waiting for a train that never comes. And even if it does come, banks won't lend you to in a crash anyway. Cash is king in a crash, and unless you have it, you'll still be a spectator. The market is transforming. The days of easy money are gone. The tide of a rising market lifts all boats has receded. Now it is a game of skill, knowledge, and nerve. The transfer of wealth is happening right now, this very second. Properties are changing hands from the unaware to the informed, from the passive to the active, from the fearful to the strategic. You have the data now. You know the players are, you know the supply constraints, you know that rents are rising and the population is growing. The question isn't, is the market dead? The question is, are you going to be one of the people who watches Britain get bought up, Or are you going to claim your piece of it? Don't let the headlines dictate your financial destiny. The best investments are often made in the darkest times. The window is open, but it won't be open forever. Educate yourself. Analyze the numbers, not the noise. And remember, in the game of Monopoly, you don't win by hoarding cash. You win by owning the board.